Hello and welcome to another update about ADA. So yeah, with ADA we have the situation that we've broken above a key level that I mentioned in my last video. And to be honest, over the last few days we had so many movements that it's really hard to keep up with all the developments here. But the point is that I made in the last video is that if we break above the 78.6% retrace, yeah, and we are just doing that now again, that it makes the scenario that we had on the chart in the previous video less likely. So in the previous video it was like that. I said that, that the alternative scenario is that the wave 2 low was already in and that we're already on our way up in a wave 3. I think the target was around 55 cents for the wave 3 up there, yeah. So that was the alternative scenario. Why? Because we really only came very briefly into this support area. However, I emphasized that the wave 2 could already be in because we hit the defined support area. Whenever that happens and we go into such a support area, the minimum requirements for such a wave are fulfilled. That is, from a strategic point of view, the way I normally would do it, I would already add a position when we hit this support area for the very first time, because you normally get a bounce either way. And these are the deep support areas, the relevant support areas, yeah, where at any point in time it can turn around. Now, I did tell you that my primary expectation is, though, unless we go above a certain level, that this is the W, X, Y, and we will get a deeper wave 2. Now, what we can see at the moment is that we broke above the 78.6% retrace, and I told you if we get above that level, it will make it much more likely that we will not come down once more in a wave 2, and that the wave 2 was already in. So I'm going to do it like that now and say the wave 2 was already in because we broke substantially above that level. The confirmation for that, yeah, this is now an indication. The confirmation for that will only be reached or obtained as soon as we get above the previous wave 1 high at 44.1 cents. So again, in this case, you know, you never know what's going to happen. We don't have a crystal ball, but always pay attention to these support and resistance areas that are highlighted on the chart, because these are the areas where I would normally, you know, if I was trading this, I can't trade every chart, but if I was trading this, I would have had a short position in here. And again, that would have worked out. I would have had a long position in here and that would have worked out. Irrespective of, so unrelated necessarily to the expectation where the chart goes, yeah. So even if I think we, let's say, and I always try to make that clear, my primary and alternative scenarios, yeah, I don't necessarily trade 100% based on these, because if you think about it strategically, you want to be prepared for both scenarios, and that is why I try to emphasize that whenever we hit these areas, you know, you might want to think about entering a long position here. You might want to think about entering a short position here, even though I say, okay, we are going up and it looks corrective still, we will probably come down once more. I still would enter here because it is just strategically the scenario that makes more sense. Strategically, you want to be prepared, right? Just don't know if that makes sense to you at the moment, but this is sort of what is the approach that prepares you for everything, right? So you want to be prepared. It's like playing chess, really. So so now that we assume wave 2 was already in, we can assume we are in wave 3 that could take us to 55 cents. This will not happen in one go. One more reason why I'm putting the wave 2 down here now is because we can count 5 waves to the upside. Yeah, we can count 5 waves to the upside. And let's take a look at the subwaves, because this is now important. So in terms of subwaves, we can count 5 waves up, which is again why I consider this 1, 2. The wave 3 up here, 4 and 5. We can say 5 waves were already complete. I have to change the wave degree here. Say 5 waves were complete, which means this was already the wave 1, this probably the wave 2, a short wave 2, and that we can assume at the moment that we are in the 3rd wave. There will be a 4th and a 5th. And this could take us to 55 cents, right? This is sort of the target. Don't know if that will happen already in this wave degree. It could be. So if we now say, all right, we've had wave 1, we've had wave 2, 3 and 4 and 5, in this wave 1. This was wave 2 already. Then we're now in the third wave. What would be the target for this third wave? So to really confirm that we are in this pattern, we need to break above the 44-cent level. That's the key breakout point. Yeah, until then we have still downside potential. And the target for that wave 3 would be 47.6 cents. Then there would be a wave 4 setback, and then in a wave 5, yeah, we could sort of get into this region above 50 cents. Don't know if we will get to the 55, but we will be able to specify that a little bit more when we get a bit closer. So yeah, this is currently how I think it's going to develop. We need to hold, obviously, in all cases now, the wave 2 low here at 40.7 cents. If we don't, then we have to go back to that scenario where I think, okay, wave 2 was maybe not yet in, but at the moment it's looking like it was in, and it's looking like we are in a wave 3. We are pushing to the upside. And one more thing as well to add to the chart is a trend line, yeah, which helps you understand when this trend might be over. At the moment in the wave 3, we should stay above this trend line. So let's see how long this holds. So going below that level will already show you that we might be rolling over here. Huh? So this is currently how I see ADA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.